Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. So we came in this morning and overseas markets were a little bit lower. Okay, not crazy trend-breaking moves, but some profit-taking. You know, in Asia, you saw the Shanghai down about 0.5% after being up 1.5, and then really the Hang Seng was hanging in there. We've talked about how we feel like the FXI, which is an ETF for a lot of exposure to China, is more of a tailwind versus a headwind, but we have to follow our rules. So if you look here at the FXI, which is something that we trade a lot for, here, this was, way back when. Remember this breakout above the 8 and 21 day? That gave you a big move, that you saw the same move in the Shanghai from 3,000 to 5,000. Well, this is when the trend broke, and that's when you could have got out of the way. Then below the 200-day moving average, very unhealthy market for some time, and then boom. What happened here? You took back the 200-day, and that's when things started to change a little bit. So let's take a closer look so you guys can see it a little closer up if you do trade China. China has been trending off the lows. Trending. So every day you wake up, it has not been a headwind. It's been a little bit of a helpful for our futures. Here's when we took back the 8 and 21-day moving average. Okay, that was when you could have got a little long. Here's when it went above the 200-day, and then boom, look at this nice breakout. But extended from the 8-day, extended from the 21-day after a big move, so it could use a rest. So if you're looking for some exposure to the FXI, this would be support 1, and this would be support 2. So even if you do get some kind of pullback here, it's not the end of the world considering where it came from and how we're above all the moving averages, which is a lot healthier than we were last year when you were below everything. So we'll see if that continues. Same goes for Europe. As far as S&P cash, you look at the S&P cash and you'll see our markets also had a really nice move above the 2-year range. Okay, but since then, since the first initial pause, hasn't been a powerful move, but overall we're still above the 2-year range breakout, and we're still above the 8 and 21 days. So if we take a closer look here as a trader to make cash flow, okay, basically, here is when we reclaimed the 8 and 21 day, right around this 2080. Here is when we had that strong jobs report, and that could have been your ad. And then here was a lot of choppiness, where a lot of stocks wound up doing well. Broke the 8-day, a lot of us reduced risk, and then you had the 21-day hold. So now here, okay, not the greatest thing to see a move above a prior range to then close on the lows and give back the 8-day. But again, look where we came from. Sometimes the speed changes, sometimes you have choppiness. So, if you reduced a little risk in the indices, we'll see what happens here if we were to come back and retest the 21-day, which still would be a higher low. You have a low, a higher low, and we'll see what happens in here. Okay, but all in all, everything seems to be moving around according to, and every different sector is having its move. So, in the last week and a half, it's been oil, right? We talked about the move in oil. Me and Annabelle, we went over buying oil about a week and a half ago. And if you did so below 40, you did real well. Oil is now above 45. Then if you look at oil stocks in the energy sector, okay, here is where you had that nice reversal point. Boom. Okay, now all of a sudden it's coming right back to the highs here. And what happened here? Reclaim the 8 and 21 day. You have resistance right there. It does seem at some point it could go higher. Just like I showed you with the FXI, okay, the oil group as a whole was below the 200-day for almost a year, and now it's above for 3-4 months. So it's showing some signs of health. So this could be a spot to show some alpha. Okay, what would be a nice resistance area here with support? Well, this could be a little bit of resistance, if not higher. So let's go back. Since we're through earnings season, different trades that we put on as swing trades, and different trades have been just for cash flow. First, let's start out with Apple. Apple, I've been in the calls since after earnings, and today I turned them into call spreads, and I am flat the stock, I think for the first time in a while, or maybe the second time since then. Overall, Apple itself, great trade. Okay, you go to my Twitter. Annabelle and I talked about how if it broke above this downtrend and held this gap, you could be long it for a swing trade above this. And since then, it's had a really nice move. Okay, so you could have been long Apple here versus the 200-day, and then add to it a few different times. One right here, and then another time right there, and then we added again yesterday. So today into this top until I sold some, bought the 105 calls, bought the 108 calls, and then now I sold the 110. So now I'm just going to sit, and we'll see what happens next. All in all, my target right from here was this 808 to 112, so smack in the middle. Why not sell some? Okay, especially considering you have Berkshire adding to it. It was a news event that they sold into, so maybe it comes in a little bit. Then we talked about BABA. BABA was a great stock trade and option trade, and why was it? Because remember, again, I'm bringing back Annabelle because Annabelle and I keep talking about good setups that you can make money with, and BABA was under a lot of accumulation in here, took a lot of time, false breakout here, wasn't ready there, finally gave you a little breakout above 80, and then broke out pre-earnings above 85, and this is when we were in the calls, and the calls went up a few 100% here. So now the question is, remember in the morning call today I said, can we retest this 105? Well, no, sorry, this 95? Well, we retested that and came off the lows in a weak market. So now for moving forward, I think a lot of people got a little bit long. Sperling said he's long a third here. So now if it comes in and tests and holds above, maybe you could add to it, and then at some point probably breaks above this and heads north, probably north of 100. So this still looks good. BIDU itself was a great trade yesterday. Remember we talked about, can BIDU play catch up? A lot of people want to know what's going on with BIDU. It's been a laggard. Well, BIDU woke up 2 days ago. We had it in the morning call, held in here. Now it's above the 200 days, so maybe BIDU continues to the upside. Another Chinese ADR that people have been watching is NTES. What a move in NTES, right? NTES has been, was a mover way back when. We listed it here when it broke this downtrend, and then when it took out resistance and held above it, and now it needs a little bit of time, but this has been some move. And look at this nice trend here. So, this has been on the morning call list also. Some new things on the morning call list is a lot of the new issues, right? The new issues have been in fuego. So you look here, ACIA, stock actually held in pretty well today considering the size of this move. We've been talking about it. I think Annabelle and I went over it here. Okay, now boom. So now we'll see if it could build above this spot and flag to continue. TWLO also, really nice, actually inside bar today. So give it a little bit of time above here, let the moving averages catch up, and then maybe it rebuilds. This was a nice buy above this. Okay, and then LN we started charting. This too looks like it is hanging in there. They're supposed to be the Facebook of Japan. Boom, boom, the little inside work, it can continue. And then let's go to gold real quickly before I end. The GLD, okay, the GLD and the gold miners. Everyone around the world wants to know what gold's going to do, but technically it's telling you the story. To start the year, it broke above the 200-day, then it broke above resistance here that became support, and now it's wedging, so we'll see what happens if gold can make that move to 1,400 an ounce. Right now, the Fed's saying that maybe they could raise rates, and if they do, I would think gold gets hit. So here's your support. There's your resistance. It's getting tight. We'll see what's next here. The banks did respond well to Dudley. Morgan Stanley, weekly highs. Goldman Sachs, right into the 200-day, and now we'll see if Bank of America could play some catch up as this is above the 200-day now and it's considered the value play. So we'll see if that can go. So all in all, a down day, does it lead to another one? Maybe. Okay. Stocks have been on the move no matter what the indices are doing. If the indices get really pressured, maybe you have to be a little bit more careful. We did break the 8-day, so that's why I'm really not in the indices. I'm going to wait to see if we could hold the 21-day again before I get back in there. I do have some stocks, small, to see what type of speed and strength we have. And then again, like the Apple trade, it's covered now with calls, and I'll wait and see there. And if it stays above 108 to 110, those spreads will be maxed out, which would be great, considering 100 to 300% on option trades. You can't ask for better than that. And then we'll watch things that's set up. High beta tech's been a little weaker. Google, Amazon, Facebook, we'll see what happens there. And again, don't expect too much. We're going into the second part of August, which doesn't tend to be a great month, but doesn't mean you could just be net short. But if you want to do less, do less. I'll see you at the Morning Call Express. Have a great night.